Okay, dear students, Assalamu alaikum. Let's start the second live revision class of ATX March 2025. In the very first class, we discussed all this. Let's see. Okay, now let's just start from this example. And the little announcement, let me repeat. It's a just second live revision class. Obviously, will not be so long, but from class number 3 onwards, the duration of the class will increase because we'll be discussing in one class, we'll be revising number of things, inshallah. So the duration of the class will increase. It will remain once in a week, but duration will definitely increase from class 3 onwards. And I can guarantee you, you are going to enjoy the classes, provided that you are also watching the pre-recorded lectures. Then the revision classes, they will be extremely productive for you, beneficial for you. We have employment income is a non-saving income. Then we have saving and dividend income. Non-saving income. Saving income simply means interest income. And dividend income is dividend income, we know that. And then there's a column of total. So thank God now students are coming. They are just joining us now. Initially, I don't know. Okay. So let's just I'm writing it directly. Employment income is 10,000. Saving income is 18,500. Dividend income is 12,000. Let me use the calculator. 10,000 plus 18,500 plus 12,000. I'm getting 40,500. I'm getting 40,500. Personal allowance, which is 12,570. Obviously, 10,000 from here. Remaining personal allowance will be deducted from the saving income, which is 2,570. After deducting the personal allowance, we'll get taxable income. Non-saving taxable income is 0. Saving 18,500 minus 2,570. Saving is 15,930. Dividend is 12. Let's add both of them. So final taxable income is 27,930. Now let's calculate income tax. Please now listen carefully. Whenever in the column of non-saving, your taxable income is less than 5,000, then the concept of a starting rate band comes for the saving income. Repeat, whenever in the column of non-saving, your taxable income is less than 5,000, only then starting rate band comes in your calculation. Right now, taxable income is 0. It means entire 5,000 starting rate band is available. And before doing the calculation, let me just show you one thing. Non-saving income. In the column of non-saving income, I'm talking about taxable income. Taxable income, okay? For example, if the taxable income is 1,000, then a starting rate band for saving income will be 4,000. If taxable income in the column of non-saving is 2,000, then a starting rate band will be 3. If in the column of non-saving, let's say taxable income after deducting the personal allowance, it is 4,000, then starting rate band 1000 will be available to you. But if in the column of non-saving taxable income is 5000 or more, then no starting rate band comes. So the issue of the starting rate band only arises when in the column of non-saving your taxable income is less than 5000. If it is 1000, then starting rate band is 4000. If taxable income in the column of non-saving, if taxable income in the column of non-saving is, let's say, 0, then entire 5000 starting rate band is available. But if the taxable income in the column of non-saving either it is 5000 or more, then you will not get any starting rate band. Here, obviously, entire 5000 starting rate band is available. Starting rate band, saving income, 5000 into 0 is obviously 0. Now we have to look for the nil rate band for saving income. Actually, nil rate band for saving income depends on individual's tax paying status. Basic rate taxpayer gets nil rate band 1000. High rate taxpayer gets nil rate band 500. Or if someone is an additional rate taxpayer, then for the saving income will not get any nil rate band. How do we decide the status of individual's tax paying status? It is always decided on the basis of total taxable income. You can see that total taxable income in the last column, it is 27,930, which is in fact less than 37,700. So when your total taxable income either it is 37,700 or less than that, it means that individual is a basic rate taxpayer. And whoever is a basic rate taxpayer gets nil rate band of 1000. So nil rate band, saving income 1000. So the total saving income is 15,930. Out of that, 5000 we have taken in the starting rate band, 1000 in the nil rate band. Let's see how much is left. 15930 minus 6000. I'm getting 9930. Obviously, 9930 falls in basic rate band, obviously. So basic rate band saving income. 9930 into 20%. Now, dividend income. When it comes to dividend income, we know that irrespective of individual's tax paying status, everyone gets nil rate band of 1000. Obviously, the remaining 11,000 falls in falls in basic rate band. Why basic rate band? Because look at the total taxable income, which is just 27,930. So everything actually falls in basic rate band. Basic rate dividend income 11,000. Basic rate in case of dividend income is 8.75%. So 11,000 into 875. I'm getting 962.5 or make it 963. So let me recheck 11,000 to 875. Yes. Simply add 1986 plus 963. So income tax liability is 2,949. Okay, now non-saving, saving, and dividend income. The normal sequence of allocating the personal allowance is number 1, 2, and 3. This is the normal sequence of allocating the personal allowance. But according to HMRC, you can change the sequence of allocating the personal allowance provided that it is beneficial for you. 99% the sequence remains in the question is the first one, which I've just written. Non-saving number one, then saving the final is dividend. Another possibility is there for the personal allowance. Number one, non-saving. Two, dividend. Third, saving. Another question is, when do we go for the second, you can say, second method of allocating the personal allowance? Let me show you. When, let's say the first one is A, 99% A is applicable, but still 1% chances that examiner might ask you a question in which allocation B is possible. So the main concept is, according to HMRC, you can change that sequence of personal allowance provided that it is beneficial for you. Let's see a question. Let's say the employment income is 8,000. Saving income is 4,800. Dividend income is 20,000. Requirement is income tax liability. Now let's solve. Let me change the color. Number one is non-saving. Second is saving income. The last one is dividend income and the total. Obviously, employment income is a non-saving income, which is 8,000. Saving income simply means interest income. And dividend is obviously dividend. Let us use the calculator. I'm getting 32,800. Personal allowance, obviously 8,000. We still have personal allowance. Personal allowance is still left. The personal allowance is 12,570. We have used only 8. Let's see how much is left. 12,570 minus 8,000. I'm getting 4,570. Now listen and listen carefully. Please look at the situation in which, number one, look at the column of non-saving. Taxable income in the column of non-saving is 0, which means that starting rate band is available. Entire 5,000 starting rate is band available. Number one. Number two, look at the saving income. The saving income is only 4,800. Entire income falls in starting rate band, where applicable tax rate is 0%. So in this case, if you deduct the remaining personal allowance from the saving income, so you will not be saving any tax. Why? Because the entire 4,800 falls in a starting rate band. In that case, whenever you come across a question where entire saving income falls in a starting rate band, then remaining personal allowance will be deducted from the dividend income. So let's see. Let me use the calculator. 20,000 minus 4,570. 20,230. Income tax liability. Entire 4,800 of the saving income falls in starting rate band. Dividend income, we know that everyone gets nil rate band of 1,000. Out of 15,430 dividend income, 1,000 we have taken in nil rate band. So the remaining obviously falls in basic rate. Basic rate dividend income. 14,430 into 8.75. Students, I'm getting 1262.6. So I'm just making it 63. Let me recheck. 14,430 into 8.75. Yes. This is your income tax liability. Okay. Let's say the employment income is 6,000. Saving income is 5,000. Dividend income is 25. Requirement income tax liability. So I want everyone to calculate income tax liability. You have 2 minutes to attempt this, please. But I want. Okay, students, let's see. Oh, different answers. So I can see the variety of answer, even though the question is same for everyone. But let's see who has the correct answer. Let's start. I was expecting no variation in the answer, but surprisingly, let's see, non-saving. Saving income. Obviously, employment income is non-saving income. So the total is 36. Personal allowance. Taxable income. Okay, again, you can see that entire saving income falls in a starting rate band. So the remaining personal allowance will be deducted from the dividend income. 12,570 minus 6,000. I'm getting 6,570. 12,570. So 25,000 minus 6,570. 18,430. 23,430. Obviously, the entire 5,000 falls in a starting rate band. Okay, now. Dividend income, obviously, nil rate band 1,000. So 18,430 minus 1,000. So 18,430 minus 1,000, I'm getting 17,430 into 17,430. Students, I'm getting 1525. So whoever is having an answer 1525, that is correct. Income tax liability. Okay, now let us introduce few more, I would say, concepts, few more rules. That is, in our ATX syllabus, there are two pensions. One is personal pension scheme, another is occupational pension scheme. Right now, I'm discussing personal pension scheme. Personal pension scheme means simply, let's say an individual has taken an insurance policy for himself or herself. Okay. So, in case of personal pension scheme, whatever individual pays according to HMRC, it is treated as 80%. 20% will be paid by HMRC. Second, whatever individual pays, it is 80%. But due to personal pension scheme, basic and high rate band limits will increase by gross PPC. So the basic rate band is 30 ends at 37,700. We will add gross personal pension scheme contribution. High rate band ends at 1,25,140. We'll add gross PPC. Actually, whatever individual pays, it is 80%. We have to gross it up. We have to bring that 80% at 100%. For example, if personal pension contribution is assuming 8,000, nothing is mentioned. It is always assumed net. It is always assumed 80%. How will you gross it up? Multiply this with 100 divided by 80. So the gross PPC is 10,000. So number one, whatever individual pays, it is 80%. 20% will be paid by HMRC. Basic and high rate band both will increase by gross PPC. Third, gross personal pension contribution reduces adjusted net income. Now the question is, if gross PPC reduces adjusted net income, so what is the benefit of reduction in ANI? There's a benefit. Let me introduce the rule. ANI, adjusted net income. If ANI exceeds 1 lakh, then personal allowance reduces. If adjusted net income exceeds 1 lakh, then personal allowance reduces. What is the format of adjusted net income? Adjusted net income. We'll take total net income less gross PPC. Less gross gift aid donation. Gross gift aid donation. Actually, gift aid donation exactly works like gross PPC, but that is not an examinable in ATX, but it's still better to know it. So the final answer is ANI, adjusted net income. If ANI exceeds 1 lakh, then personal allowance reduces. Personal allowance is 12,570 less ANI minus 1 lakh into 50%. Now, if ANI is greater than equal to 1,25,140, then personal allowance becomes 0. If adjusted net income is equal to greater than 1,25,140, then personal allowance becomes 0. Question? Employment income is 80,000. Saving income is, let's say, 25. Dividend income is 5. Required income tax liability. I want everyone to calculate income tax liability. And one more thing, there's a 20-minute break, that prayer break, because so within 20 minutes, inshallah, we'll resume the class. Before resuming the class, I'll drop the message in your respect.